As we reported, international paper just crossed the Bloomberg terminal. Second quarter adjusted profit of 20 cents a share. The average analyst estimate surveyed by Bloomberg was for a break-even quarter. The company's CEO, John Faraci, joins us now from headquarters in Memphis. John, glad to have you with us this morning. So it seems like you had a pretty good quarter, despite the fact that the recession is putting pressure on demand for your company's office paper, cardboard container supply. Is that right?
It's still a very tough environment out there, Deidre, but the name of the game in this environment is cash flow, and we delivered strong cash flow, better than the first quarter and actually better than the second quarter last year.
How do you see international demand? I mean, many analysts have been reporting on the fact that you have growth in China, you have growth in Russia, and that's making up a little bit for some of the lagging business that you're seeing here in the U.S.
Well, certainly China. China's an important business for us. About $1 billion in revenues is showing good positive growth. And I'd also say Latin America. We have a big operation in Brazil, is starting to show positive growth. I'd say Russia, where we also have a big presence, really hasn't turned the corner yet. And here in North America, I think the worst is over, but we're bouncing along the bottom and going sideways.
From where you sit as the head of this company, I mean, I heard you say you don't think the worst is over for the U.S. recession. When do you think that there's going to be a more favorable environment for business in general?
Well, I do think the worst is over, Deidre, but I think this recession is going to end. The question is, how is it going to end and when? And at this point in time, our economy is still very weak. There are more positive signals out there, certainly, than there were 3 or 4 months ago. But overall, job growth is not positive. It's still negative. The housing sector is weak. The automobile sector is weak. The credit markets are functioning better, but they're not functioning as well as they need to for a sustained economic recovery.
We know back in March you had to cut your dividend, in fact, by 90%. When do you see being able to restore that program for your investors?
Well, we need to see the stabilization of the global economies and have some visibility, which really none of us have at this point in time, as to what the prospects are looking ahead before we start to think about restoring the dividend, which should be high on our priority list when we get to that point.
Talk to us a little bit about some of the business units. For example, container board. Are you going to have to sort of keep the supply down? Do you see price increases coming? Give us a sense on what's going on in that business.
Well, box demand, which is a good indicator of the overall economy since it serves so many sectors, is down about 10% this year. That's the steepest decline we've seen in a couple decades. And it really hasn't shown any signs of sustainable or significant improvement in the last couple months. We're managing our inventories very aggressively. In this kind of market, you don't want to overproduce, so we're matching supply to our customers' demand, and that's working quite well in a very tough environment. In our paper business, we're seeing the same thing. Demand down double digits, reflecting the overall softness in the economy. And again, inventories are in good shape in that particular business, and so we're able to protect our margins.
You just mentioned you're able to protect your margins. I mean, when do you think you'll be able to see margin growth?
Well, we had margin expansion in the second quarter. Our margins are up about 180 basis points, which is important. But what's happened is, that's getting more than offset by, demand down, 10, 15, in some cases 20%.
Some analysts have suggested, in fact, that IP may reap as much as $2 billion this year from so-called black liquor tax credits. To what extent are those credits allowing you to pay down some of your debt maybe a little bit faster than expected?
No question they're enabling us to pay down more debt faster, but importantly, our cash flow from operations, that's cash flow without the fuel credits, was higher in the second quarter than it was in the first quarter, and higher than it was in the second quarter of last year, which is a much, much better economy. But those credits are enabling us to pay down debt at a much faster rate than we anticipated. We paid down $600 million of debt in the second quarter and $2.4 billion from our high point last August.
How much do you expect to collect in these fees this year?
Well, that depends on how long the fuel credits continue. The legislation right now provides them to continue through the end of the year, and we'll report close to a little less than $1 billion of fuel credits through the second quarter.
So you're just saying it depends on what happens in D.C.?
Yes, it does.
Okay. As far as going forward, I mean, we talked a little bit about the growth in Latin America. You said not quite realizing you have a joint venture in Russia, not quite seeing. When do you expect to see in Eastern Europe growth take off?
Well, growth taking off, I think, is probably not the highest probability case. I think we're going to see a recovery in this global economy, just like we're going to see a recovery in North America. but I anticipate it's going to be slow and possibly uneven as opposed to a sharp rebound. We are seeing in our joint venture in Russia, since it serves the Chinese market, 65% of its sales are in China. That market has come back, but prices were at very depressed levels when demand started to improve.
John, we thank you.
Thank you.
John Faraci, CEO of IP.